Welcome to Taking Stock. I'm Amanda Lang. Coming up on the show, a federal budget focused on investments, but does it add up for business? And parsing the budget's plans for the broader economy. Plus, Canadians are ready and willing to make sacrifices for the country. Let's build on that. That's all ahead. First, for the week that was in business, it's time for the briefs. The federal budget delivered what was most expected, a large deficit, more than $78 billion this year, but with it a promise to spend on infrastructure and spur business investment. It also promises to cut government costs by about $60 billion over 5 years, including cuts to the public sector workforce, and it offers new spending of $141 billion over 5 years aimed at spurring economic growth. As promised, the federal government is starting a formal complaint against Stellantis. The dispute resolution process is aimed at recovering the billions the feds have spent to keep the automaker in Canada. Stellantis said recently it will move production of its Jeep Compass from Brampton, Ontario, to a plant in Illinois. Stellantis said the plant is paused, not closed, and that no jobs have been lost. Canadian quantum firm Xanadu will list on the U.S. NASDAQ as a public company through a $3.6 billion U.S. deal with a shell company. Xanadu will receive about $500 million in the transaction. Quantum computing is still in its infancy, and while full of promise, quantum is still prone to errors. U.S.-based Kerr Mining plans to take over Canada's New Gold in a $7 billion stock deal. That puts New Gold's 2 Canadian mines, which include gold and copper reserves, in the hands of U.S. investors. And it comes just 2 months after Canada's Teck Resources agreed to be acquired by Britain's Anglo American. Elon Musk's giant pay package, worth $1 trillion if Tesla hits certain targets, is under attack from Norway's sovereign wealth fund. It's the 7th largest shareholder in the company. Musk has suggested he will walk away from Tesla if the pay package isn't approved. Other large investors in Tesla have signaled that they will support the payout. U.S.-based Ovinativ says it will acquire Canada's New Vista Energy for $3.8 billion in stock and cash, expanding its reach in Alberta's Montney shale gas region. Ovinativ already owns just shy of 10% of New Vista. It was formerly Calgary-based in Canada before its 2020 move to Denver. And those are your business briefs. Now here's a look at the federal budget by the numbers. The budget includes $581 billion of total spending and a deficit of $78 billion, projected to drop to $56 billion in 5 years. Interest spending on debt is $55.6 billion this year. There's $141 billion of new spending in Budget 2025, including $51 billion in new spending on infrastructure aimed at facilitating trade and housing. And there's $81 billion in defense spending. A centerpiece of the budget, part of a $110 billion allocation to productivity and competitiveness, is the Productivity Super Deduction, a suite of tax credits and incentives aimed at getting business to invest in everything from manufacturing equipment to technology. The size of government will shrink by 10% over the next 3 years, or about 30,000 employees. And our population will shrink too, as immigration targets will come down, with a new cap on permanent residents to hit 380,000 a year in 3 years. The budget is intended in part to help Canada's economy become more resilient. Is there enough of what business needs to see to help us get there? Theo Argitis is Senior VP of Policy at the Business Council of Canada. Theo, thanks for being with us.
And great to be on.
So we've seen the debates about whether it's a generational budget, a transformational budget, but importantly, it is a pro-business budget, I think, by any kind of reasonable measure. Is it pro-business enough for you?
It depends on what your objectives are. Mr. Carney's objectives are pretty lofty when it comes to what he says he wants to achieve, which is an increase of $500 billion in private investment over the next 5 years. That's, Amanda, that's about a 20% increase in business investment from current levels. That is an incredibly ambitious target. Mm-hmm. And even though you're absolutely right, there are a lot of good things in this budget. There are a lot of things that we like. In particular, the emphasis on the economy, just for starters. I mean, that's a change. And the government seems to be paying attention, listening to businesses, which we like as well. But if their objective is to increase business investment by 20% on an annual basis, no, this is not enough. This budget, standalone, it is not enough to increase private investment to those levels because it's just not that transformative. The objective is transformative, but the budget itself doesn't meet that objective.
Fair enough. What would you have liked to have seen if you were adding to the policy mix here? What would that look like?
I mean, that's a good question, and you know, there are a lot of really good ideas out there. There's an opportunity to be creative if you really want to make a difference. I'll tell you how I see it, Amanda. You know, we are in a situation where I'm really concerned we're kind of trapped in this like low investment economy, which reflects, you know, all the uncertainty out there over the last year or so, but also reflects really a decade of disillusionment from businesses, right? They've really struggled to kind of see, a positive landscape in Canada from an investment point of view. So I think that we're at a situation where incremental change may not be enough. You want something a little bit more big bangish to kind of, jar the economy a little bit, to kind of get to change that perception that Canada is not a great place to invest. So I was looking for something bigger.
Yeah.
I mean, you know, could it have been something on the tax side? I don't know. We didn't see any significant tax incentives for businesses in the budget. And even though we really think some of the signaling on the regulatory side is positive, it's still just that, it's signaling. So we haven't seen any kind of major change in policy that would really make a difference to how corporate boards see Canada as an investment destination.
So one of the things, of course, that the government wants to do is increase trade. There were things in this budget aimed at facilitating trade, spending on trade infrastructure, new trade, organizations, more money for EDC. Did all that add up to something that you think might actually help get us to the lofty goal of 50% non-U.S. trade by 2030?
I mean, that's the diversification of trade is going to take a long time to happen. I mean, the best way to do it is through energy, getting our energy to markets outside of the U.S.
Yeah.
And that's going to require years and years of, even if we get the regulatory changes and we get the tax treatment that businesses want, that'll be, many, many years in the making. So we're not going to see anything immediate on trade diversification for Canada. What the focus should be on is actually resolving the trade dispute with the U.S. And making sure that our access to the U.S. market continues going forward.
Theo, so good to have you for this. Appreciate your time.
Thanks, Amanda. Great chatting.
Theo Argitis is Senior VP of Policy at the Business Council of Canada. Coming up, we're talking taxes and business investment in this federal budget. Stay with us.